Good morning, traders and investors around the world. Welcome to this Monday, March 28th edition of Pre-Market Prep Plus with StockOdds, the last Monday of the month, the last Monday leading into the last quarter of the month, the last Monday leading into the all-important jobs number on Friday. So that the setup on the Monday. Let me share the screen. What we're looking at, pretty quiet session here, making a home in the 45.30 handle. Our close right there at 36.50. Get a little bit above it. They bring it down. You get a little bit below it. You bring it back up. So there you go. Keeping an eye. Can we get a bid? Hold the bid above the close and take out that pre-market high. The lockdown in Shanghai, not good for the oil market. Oil down 8.18 at 105.72. Gold just consolidating back and forth above 1950, down 16.30 at 19.38.20. Silver, that's in the red too by 38 cents, 25.23. Bitcoin, nice steady march north. Bitcoin up over $3,000 at 47,695. And Ethereum futures, they're going the same direction, a little bit more on a percentage basis, up $263, 33.91. I'm going to stop the screen share here, and I'm going to bring in our ETF odds trader, Rob Friesen. Rob, how you doing on this Monday morning?
Not too bad. Since you ended on the Bitcoin and Ethereum note there, Ethereum has that potential to slightly outpace Bitcoin, as we talked about, more the utility side, and plus moving towards proof of stake versus proof of work. And that 45,000.
Explain that, Rob. Proof of stake versus proof of work.
Well, that means you put up your coins for that consensus mechanism instead of computers crunching to prove it. So the staking of it ensures that the algorithm continues to hold up against, an attacker that would control the network. So the consensus by staking rather than by mining. Make sense?
Yes, sir.
One mining is more power intensive, obviously, right?
Mm-hmm.
So proof of stake consumes less power. So the network feels it's a good proposition, and it's been talked about for a long time. Various versions have been net tested, and this one is finally coming around. So I think the argument for Ethereum still is a little bit over Bitcoin, but again, you have that same phenomena in gold versus silver. One's more currency, one's more utility, right? 45,000 though on Bitcoin is a key area that we did get above, and so that could be the floor that you want to lean on for the future. I'm not sure, but we have to allow it to move higher. If it wants to, and also we need to know what the downside risks are. So keep talking to your advisor about your Bitcoin trades, okay? Anywho, let's move on to equities and ETF trading. And I just wanted to show how, there's again context every day. Every day is kind of like unique, yes, but also, hey, I've seen this movie before, right? It just, there's certain patterns and certain things that repeat, and certain themes that you got to really tap into so that you can run your scenarios. So let me share my screen here, and we'll just look at a couple things. Okay, let me know if you see it.
Yep, FinViz.
Okay. So again, this pre-market slide in the SPY is one of those things we've addressed before, and that is, what happens like in your world, Joel, based on you know, what the futures are doing in the Globex, and you get that whole context, right? This is only showing from pre-market how it was sliding down on the ETF. So obviously not the futures and not the 24-hour. So, but the context is important, and that is, what was the pre-market high? What's been happening since the ETF has been trading? And, you know, where are we prior to the opening event? Okay. So we've mentioned before that treating this, if things have been elevated in the pre-market and they've come in, you can almost treat it like the potential for a discount opportunity, right? So yes, it could open and go lower, or it could open and go higher. You have to assess a contextual probability on that because of the whole 24-hour period, what's happened, you know, in the pre-market and that context. So allowing it to be, you know, a discount and possibly pop is just one of the things that you have to do. And then the question is, you know, which ETF do you want to be involved in? Well, some people have their favorites. We have a lot of people in the financial community that just trade the SPY or the leverage products off the SPY, like SSO and SDS. And that's what their go-to is on a daily basis, and nothing wrong with that. But I wanted to show how, if you were trading the SPY, how being myopic on it could be a detriment, whereas still being relationship minded and looking at other ETFs for you know, producing confidence or looking at opportunity. So that's the kind of the discussion here today. So you can see as we came into the open that, you know, the SPY did move up, but did it have the leadership, right? Was it giving good quality signal to you? Well, let's look at the, I'm going to pull up the relationship here between the two of them.
Okay.
So this, I don't know if you can see this that well. I just took a snapshot of two of them stacked here. So this is the Nasdaq 100 index, and this is the S&P 500 index. So this one's, we're going to trade the Qs, QQQ. This one, we're going to trade the SPY. Now, look what happens here. Out of the gate, both are moving up. So this is 1 minute at a time here. And watch what happens on this pullback in the SPY. The Nasdaq 100 of the Qs keep marching. I've found that it's pretty hard pressed for the S&P 500 ETF, the SPY, to go in a completely opposite direction of the Nasdaq 100 or the Qs for very long. Why? Well, partly because the S&P 500 has the FANG stocks, some big tech stocks in it. I mean, it's not, you know, it's not going to be able to depart in the opposite directions for that long. So if you see that, if the SPY is pulling back and the Nasdaq continues to march higher, that can be a buying opportunity like we saw here. And then look what happens when it catches its footing, it really rips back up. And that continued all the way through, you know, that first 15 minutes of the day. And, you know, that's where these ETFs are liquid, and they might be a little bit skittish, but there's also information that I don't want you to ignore. And so the thought process would be like, okay, we have the context, pre-market, who has the leadership, what's driving the ETFs? Like who's a member of the Nasdaq 100, right? That might be driving it. Obviously, we know Tesla's, you know, but Tesla's, you know, impacting both. But nonetheless, that kind of changes the sentiment a little bit, right? If you have one of these tech stocks that's, you know, a favorite, a darling, you know, one of the bigger by weight, and it starts to do something either up or down, it's going to pull a lot of other things with it. This is that sympathy, this is that, Me Too trade, and it just part of what we got to look at, what's driving it. So anyway, the Nasdaq 100 did have leadership over the SPY, but that created that opportunity. And sometimes this concept of relationship-based trading gets lost on people when we talk about it, and it doesn't really connect. But imagine this. Imagine that you're watching something that has leadership, and you get to trade something that ultimately will play catch up, but you get to buy it at a discount. If you buy the leading instrument, you're going to pay that premium. You're on the forefront of risk. It's like in a race, if you're the guy that's out front and people are drafting behind you, they're saving energy if they're a runner, they're saving fuel if they're a Formula One, and they're drafting behind. This is your drafting behind opportunity here to buy the SPY or to buy the SSO, the leveraged ETF, and to see that benefit of it then playing that catch up or having that sympathy move. So if you're just a SPY trader and you're not watching other things, you may handicap yourself. You might have been shaken out of a position. If you bought that pullback, and you were watching other leading indicators at the time, you may have had the confidence then to stay in the position. So it can make a real difference for you. So let's look at it based on the relationship. This is the ratio. This is pre-market here.
Okay.
And this is the relationship between the SPY and the Qs. So that doesn't mean that the SPY is going down. It doesn't mean that the Qs are going up. It means that this relative performance between the two of them, that SPY is performing less than the Qs. So the Qs took off and they're on the move, and SPY's going with it, but at a less rate. And that's the move that you got out of the gate. So that's why I like watching, ratio spreads or factor adjusted spreads, differential spreads, to give you further insights. And actually, if you took a position and you said, okay, SPYs has the leadership, or sorry, Qs has the leadership, and I'm going long Qs and short the SPY, that's an okay way of participating in that leadership if you have that information of how the two of them are performing, and you can be in a hedged relationship. And so that's if you were short SPY and long Qs, this would have been your compensation here, right? And obviously it's, stabilized. But those initial moves in the first 5, 10, 15 minutes, even 30 minutes between these types of relationships can be very beneficial for you. So even if you don't want to actually trade it, just by watching it, if you have the ability to watch spreads, some trading platforms have the ability to do ratio spreads or differential spreads, or you might subscribe to something like what I'm looking at, TradingView here, and you can see those relationships in real time. And even if you're not able to see that, just by going and looking at how the two are doing, and especially if you have charts beside each other that you can really see, you can see the signal to noise ratio of the Qs was amazing as it was walking up the upper band, whereas the S&P 500 ETF was choppier, right? So again, signal to noise ratio is important. Pace, volume coming into, volume spikes on the up versus the down, things like that. But definitely Qs had the leadership today. And if you were trading the SPY, it would have helped you significantly to stay in a trade after a pullback or grab a pullback on the SPY. Okay.
Yeah, as you mentioned, the top components in the S&P Apple, Microsoft, and then I combined the two Googles, then Amazon, Tesla. Then you fall off a bit to, well, there's Tesla, then there's Berkshire B, and then you're back in with NVIDIA. So very tech Latin index. So you can see how the correlations hold up. Rob, do you encourage traders to get comfortable using the 1 minute chart, or just as easily do the same analysis on a 3 or 5 minute chart?
It's good to watch multiple time frames. The longer the time frame, the more sort of confirming it could be for the trend of the day. Like, you know, a 15-minute chart's probably better than a 1 minute chart for confirming that trend. But, you know, look at all the movement that's happened directionally in the first half hour. Well, you know, if you want to get some good traction on an opening range breakout, you're going to have to look at more granularity than 15 minutes.
Right.
Right. Like, so it's really not one or the other. It's actually having multiple time frames available so that you can check the stronger trend of the longer time frame to, you know, the noise of the 1 minute chart. So it's having both. And also make sure that, you know, if you like moving averages and things like that, make sure you tailor make your indicators to your time frame. So on a 1 minute, you know, I might like a 20 and 50 period moving average, but, you know, on a 5 minute, I might go 13 and 26. You change it because of the time frame so that you have the right amount of samples being aggregated into your indicator. Otherwise, you know, it's not going to be beneficial. It's like the same thing with VWAP. Is VWAP, you know, really that good of an indicator right out of the open when you have that massive change in, you know, the opening volume and things like that? Probably not. Probably the VWAP later in the day, as we mature, becomes more valid. But in the morning, the real-time VWAP, it could be kind of a bit misleading, and you got to allow for a lot of slop, but it will firm up as the day goes on. Alternatively, that you can use yesterday's end of day VWAP and look at that into today and say, where is my stock opening in relationship to the volume weighted average price? Okay.
All right, got one more question for you here from Eric. Can you please elaborate a little more on what you mean by signal to noise ratio?
Okay, so if we drill into this here, you can see that the maybe I should just draw this thing out here. It'd be easier. Hold on. Good question though, and I think it's one that people have to deal with all the time. So let's just draw this out. So if you have a trend and it's, whoops, I want a fatter one of these things here. You have a trend and it's like this, right? Very, very choppy. It's still a trend, right? You can still see a trend line that you can draw on that. The problem is that it's extremely noisy. So that's a noisy trend. So pure noise is like this, sideways, but that's
Right.
a noisy trend because it has a slope to it, right? Now, if you get this, where something is smoother and it has actually lows that are higher than the previous high. So, you know, the way it pulls back, this low is much higher than this previous high here. This low is much higher than this previous high. So in analysis, you study the translation of the trend. How does it oscillate? You know, is the troughs lower than the previous high cycle? So it's always peak, trough, and you're measuring that distance from peak to trough. And you're also looking at the data point of the low of the trough compared to the peak of the previous high. And so this is a noisy trend, and this is a trend with high signal. So this was the Qs today, right out of the gate, and this was the SPY. And all I'm saying is, if you're going to participate in being a SPY trader for really great opportunities, then looking and acknowledging the instruments that have the leadership, the instruments that are communicating sentiment, that are communicating, high signal to noise ratio, those are going to be helpful to be able to trade this by buying the pullbacks. Like a lot of guys just give you technicals, but they don't tell you how to actually do it. What I'm trying to do here is say, you know that the two are related and are not going to diverge that far from each other. You can do a lot of study on SPY versus Q and stuff like that. And certainly there are some days where Qs might be up 3% and SPY's only up 1.5% or whatever, or 2%. But overall, when you see something flashing at you, I have high signal, low noise, I'm on the move. Then you go, acknowledge, what can I trade that's in sympathy to that? Because that's where your edge comes from, by watching that leadership and buying something that is going to follow ultimately, but is currently lagging.
All right. Good explanation, Rob, of using the different indexes, correlated indexes, to help you navigate getting in and out of the market, a little bit of the market timing. So that's good for today's session. Let me see if I have any more questions. Nope. Nope. That clarifies it for Eric. We are just creeping higher as we're going to wrap things up today.
Hold on, I should mention, remember, you got Thursday is the last trading day of the month, so you can look at the seasonality almanac for your ETFs and for your individual stocks. And then Friday is the start of the new month. And so you have that turn of the month effect. And again, go to the seasonality almanac and StockOdds, and you can get your bearings on things that come out of the gate. The last trading day of the month in a quarter is important. Imbalances are bigger, institutional activity is greater, right? And it doesn't mean I can confirm what the absolute direction is, but you can look at seasonality for the probabilities of what groups are favored, and that's last day of the month and the beginning of the new month.
And
just
the
remember
jobs
that
number.
with our mid or our beginning of month seasonality, sort of the first and second trading day of the month being supposedly stronger, we're split by a weekend, and that means geopolitical risk as well. So you have to think about that too. Okay.
All right, wrapping things up. S&P's in the 4540 handle. Not quite at the pre-market high. See if we can get through that. We got close of 4546 is your pre-market high, or excuse me, 4850 is a pre-market high. 46 even, not much in there on the dailies, but just quietly walking our way up here. We'll see if that trend continues today. Rob, thanks. Great information. We'll be back with you tomorrow morning.